Alright guys, so let's start today. I have many things to say. So I want to talk about AMC, I want to talk about the SPY, I want to talk about the crypto market, guys. This is all related. So let's start with AMC. So I'm going to do some technical analysis on AMC first, then I'm going to show you guys something very important that you all need to be aware of regarding the global market that is of course related to AMC, and then I'm going to quickly analyze the crypto market, Bitcoin, because many of you are asking. So let's start with AMC. What do we have, guys? So as you know, in my last video, I told you that since we broke out on the downside from this triangle here, this was not looking good. And usually the triangles are continuation patterns, all right? So most likely they are broken on the upside. But here, unfortunately, it got broken on the downside. So you can expect a correction that can last 1/3 to 1/2 of the triangle. You know, sometimes more. This is just the usual thing. So here, the triangle lasts between June and November. So it's like 7-8 months. So we can expect 2-3 months, guys, of correction. So the correction started in December, so it's 1.5 months. So we can expect another 1.5 months. So that's why I told you something like this is likely to happen. The alternative scenario that I'm talking about for some time, guys, is that we break on the downside and then we go higher. All right. So I don't know what will happen here. What I know is that when a support is tested many times, it gets weaker. So it's been the second time we're coming on 21. We had a positive reaction again. So let's see if we get back to it again, guys. It might break. So just be prepared for that. If it breaks, the level to buy where I will personally add more shares is at 15. I don't want to trade anything between those two. I'm hearing 16 as well. Maybe. All right, 16 is the bottom of the gap up that was here, so it's a possible level as well. So what would actually tell us what is going to happen here, guys? We need to go on the global market. Once again, whenever the global market is going lower, everything is going lower. Then we saw that we have this margin calls happening, and I think we're going to have it again, but lower. So I would not expect some margin calls coming right now if the market is crashing. If the market is holding, then AMC can go to 37, 27 first, then 37, 38, this area, 36. The 200-day moving average would be resistance as well, 33. So all this area would be a resistance area. If we go there, we're probably going to get rejected at least the first time, just like it happens for support. You first get rejected, you test it again, then we can go higher. So I think we have some time. I'm of course bullish on the long run because the movement is strong, but what I'm interested in is what is going to happen on the global market. So guys, stay with me. This is very interesting. I shared this analysis on Discord, and I want to share it with you guys here. So what is happening right now, guys? The rates are going to go higher. This is what scared the market at the beginning of the year when the Fed announced they're going to increase rates quicker than what they announced the month before. So quicker, slower, we don't care. The rates are going to go higher. So this is an issue for the market. I mean, it's not a big issue, but it's usually creating some correction. Let me show you something, guys, very interesting. Here, the exact same situation. So I'm right now on the SPY chart, guys, and to look, the orange curve is the Fed funds. So they were at 0. Let me show you the Fed funds quickly here, guys. So you can go on TradingView, you can find the Fed funds. So look at the Fed funds, guys. Okay, I'm going to go on the weekly time frame. So you can see the Fed funds were at 0 between 209 and 215. Then they went up, now 0 again, and they are going to go higher. The rates are going to take 75 basis points this year. So we're going to have something like this, just like we had here. Okay, and the first rate hike is going to happen in March. So we know that in 3 months, we're going to have the first rate hike. What happened here, guys? The first rate hike happened in 2015 on November. And look at the global market. Here, the SPY, guys, okay? So this is the first rate hike here, guys. You can see the orange curve. So when the correction has started 3 months before, the first rate hike now is going to happen in March, 3 months before Jan. So we can expect, if the same situation occurs, to have a correction doing an ABC pattern just like we had here, guys. All right. So we are in the same situation. So let's analyze the past and just, this is the best information we can get on what is going to happen next. So we had an ABC correction with the A wave starting when? Here in August 2015. All right. So 3 months before, guys, the first rate hike that is going to happen in March. So what else do we have? we had here, look, we are exactly in this situation. The market was just pushing higher very strongly, and we had a bearish divergence occurring here. Bearish divergence, guys, you need to remember that this is a sign of weakness, the market making higher highs but with a decreasing momentum. Usually the volume are decreasing as well, as you can see here. So keep this image in mind. Now I'm going to show you what is happening. Okay, so let me get rid of the Fed funds so that we see more clearly. This is some stuff, guys, that I'm creating for my course. Don't pay attention to that. But you remember what was happening. We were having a market that is pushing higher strongly the past few years before the correction. So now the rate hike is going to happen here. So this is going to be the B wave. The A wave should be here, guys, 3 months before. So I think we are starting the A wave. And we are having here the market making, as you can see, higher highs. Let me unzoom like it was on that chart. And you can see here the MACD going lower. I was on a daily time frame. Let's go back on the daily time frame. It's not so clear on the daily time frame, but it is still here. All right. So we're having the MACD going lower. Okay, depends where I take it. It's not that obvious on the daily time frame. Let's be honest. We don't have it. We don't have the daily time frame divergence. Maybe we have it on the RSI. It doesn't really matter. What I mean is that this market starts to be out of steam. But once again, when we check what happened in 2016, guys, it can stay like that for some time. So there is, of course, an alternative scenario. I'm not saying the correction is starting right now. I'm just saying that it might start right now, and we have all the signals that tell that this correction might start. But we can also find support. We have some support at 460, push again higher until maybe Feb. So maybe the alternative scenario is that we have 1 more month of bull market, but then we're going to start the ABC correction that should start 3 months. Okay, so keep this in mind. One more thing I want to show you guys is the Federal Reserve balance sheet. So you guys know that they printed a lot of money. We are right now at 9,000 billion US dollars printed since they started this crazy printing. So you can see that here it was going higher when so I'm here in 2015, 2013, the market was pushing higher and they were printing, all right? And then here we had the correction, all right, in November 15 here. So whenever it was flat. So right now we're not flat yet. We're going to flatten it in March. So once again, this is showing you that maybe it's going to take 3 months, maybe 1 month, I don't know, maybe 1 week. But sooner or later, we're going to have this small correction, about 15% probably. That is going to impact the global market. We're probably going to go to 420 on the SPY, then rebound. So if this happens now, AMC is going to go to 15, then rebound. If this happens in 1 month, AMC is probably going to go first to 35, then I think correct with the global market, and then push higher. All right, so this is my view, and I just explained why I believe this is what's going to happen. So if you want to monitor the global market as well, because this is going to be related, the level on the SPY is at 460, guys. Last thing, guys, the crypto market, many of you are asking me. So this is all going to go together. Okay, crypto at 42,000. Okay, on the weekly chart, I don't see the leg that went to 42,000 already a few months ago, but whatever. So when you check Bitcoin, guys, we are correcting right now the move that started in March 20, 1, 2, 3, 4, 5. Exactly like we are on the SPY, all right? Actually, it's not exactly the same. On the SPY, we're only in the 3rd wave of this strong move, but we are correcting what is happening since October 20. So what is my view on Bitcoin? We broke this wedge pattern. Let me get rid of this first. We broke this wedge pattern, guys, that is forming the 5th wave here at 55,000. Whenever this got broken, I told you guys that I think we're going to go to 37. And then we're just moving lower, all right? So I had some hope that we have a rebound a bit earlier, but we had a fake out. I personally lost a little bit of money in this fake out. I bought here the retest and I stopped my position here. Right now, I'm a buyer at 37,000, as you guys know, because I'm sharing this with you on my Discord. So 37,000 is the level I think we might go. Why? Because once again, when we look on the weekly chart, because this is a long-term correction that, I mean, we're correcting a long-term move usually. So whenever the 5th wave is finished, we go to the top of the 3rd or bottom of the 4th. The top of the 3rd is too high, so the bottom of the 4th makes sense, all right? So it would be around 29,000, okay? So this is the bottom of the correction that we might see, but maybe not in the A wave, all right? Right now, we are just doing the A wave. Usually corrections happen doing an ABC. So if this is only a wave happen in 5 waves, as you guys know. So let's zoom on the daily time frame and let me show you why I'm going to buy at 37, because right now we are doing A wave, and I think this is the scenario that might happen. So I measure 1 plus 3 applied to the bottom of the force. So here the top, it works on the downside or on the upside. And surprise, look guys, you know the ratio, 61.8%, 1 to 1, 1 to 1.618. Okay, those are the 3 fib ratios we usually go whenever we have 1 plus 3. So here the 1 to 1 to 0.618 is 37,500, all right? And I have some consolidation here, I have some consolidation here. So this is a level that makes sense to me. I think this is where we're heading right now. Then if everything rebounds, the global market, AMC, this is all gonna go together. We're gonna do the B wave that's probably gonna go to 52, 50, you know, something like this. And then I think a C wave might happen, and this is going to go together once again with this correction that we expect to happen in maybe 1 week, in maybe 3 months. I'm not sure. I'm monitoring the levels, and when this correction is going to happen, Bitcoin is probably going to go to 29,000. From there, global market is going to rebound, AMC is going to go crazy, and the Bitcoin is going to rebound as well. This is my view, guys. That's it for today. Tomorrow I'm going to do Triple Q, I'm going to do GME. Maybe I'm going to talk a bit about Tesla. Lucid as well is doing some crazy moves, guys. I mean, not crazy, but something is happening there. So I'm going to talk about that tomorrow. I see you guys. Cheers.